Welcome to another Ariaswave update. Okay, so we're going to talk about an alternative count that I have for the Dow Jones. Now, this count is based 100% on Ariaswave, the methodology, as all my videos are. So, what that means is that there is an alternative count for what's been happening since 2009. So, you know that my view of the market at the moment using the latest I have to give, to bring to my followers, basically indicates that since the Great Depression, we've been in a corrective, expanding, upward correction, right? Now, for sure, it's going to be a type 2 expanded correction, meaning that the correction will end far above the end of wave one that you can see down here, the Great Depression highs. Okay, so ever since then, we've had an A, a B, a C. Now you're probably thinking, okay, well, how the hell is this move here a five-wave move? Not a five-wave move, right? Well, it's not. According to Ariaswave, this is not a five-wave move. Okay, because for starters, if it was a five-wave move, well, this would be a pretty decent five-wave move, right? But that's the problem with Elliott wave, right? Everything that looks like a five-wave move is a five-wave move, apparently. What about expanded zigzags? Uh, Elliott wave does not talk about those, right? They only talk about standard zigzags, right? So the problem with that is that how could you basically call every zigzag the same, right? It doesn't make sense. There are certain characteristics about the waves that tell you that this is not a five-wave move, right? And that's because of the subdivisions of the waves themselves. Okay, there are certain waves that shouldn't be here, like this one here. That's a five-wave move, right? A correction is not a five-wave move, right? But within here, you had an a B. Does that look like a B? Well, it's interestingly enough, it's got a very small B wave in the middle. Okay, and that's why you probably wouldn't believe that. But using Ariaswave, you can definitely come to that conclusion. So you get what is an A, B, C, C there, that what I showed you, and then D, E. So that's A and B and C, right? I'm going to show you an example of this again. What happened after the GFC? Okay, because this is something that is pretty important, and if you want to ignore it, then you might ignore what's coming next. Right now, initially I was thinking bearish, but then I took a closer look at the wave that happened since the GFC. And this move is not a five-wave move either. This is also an expanded zigzag, type 2 zigzag, right? So I'm gonna get to that in a moment. So let's, before we do that, just understand that the C wave here was the 1987 crash. Okay, now when you're dealing with exponential markets, of course moves down are small. How can it be exponential if the moves down are big? So that's why you get the waves, except for the A wave, which obviously was the Great Depression. That's the first move, first and deepest move, right? Deep, sharp, expanded A wave, right? How come the first wave and the last wave are the strongest? There's not even a big wave in the middle that's just as big. Got to ask yourself that question, right? Fine. So if you look at the first part since 1987 up to 2000, you can see that's what I call impulsive, right? That's got every single wave labeled there, 100%. That's a five-wave move. Okay. So I might have had the colors wrong there. That should be blue. That should be blue, but that's fine. Uh, oh, sorry, the blue ones are down here. Right. My mistake. I did get it right. You got to count the waves in order to see them, and you have to go really in depth and close. So that means that we need to see another, if this is going to be a D wave, we need to see another five wave moves up, right? Five-wave move up. Now, initially I thought this was it, but then I'm missing one key component here, right? We've got our A, B, C. Where's D, right? And that's the thing. D was the whole move up, right until 2020. That was the E wave, right? That Corona crash was just as deep as that 1987 crash, right? Except it's part of a larger zigzag. So what that means is that we're going to see a move from the March 2020 lows that's going to equal in size to the A wave, right? Which was the first move up. Now, let me just go to the US 30 chart and I'll illustrate this a bit more. Right? So my type of wave analysis is very in depth. So this is 2000 up here. That's A, B, C, and here's your D wave. Okay, here's wave D. Now, the reason I didn't post this earlier is because this has been brewing in my mind for a long time now since I started learning the waves. But I needed to get to the point where I was really good at interpreting the waves as second nature, right? Because it's very easy to get confused when you're interpreting waves. Very easy, I'm telling you. Misidentification is a key component of waves. You're going to get it wrong a lot of the time, which is why we have updates, which is why I keep updating you with my latest counts, right? So this is important because what happens if you miss out on a move based on old thinking, right? You want to start with new thinking every day, right? And if something doesn't make sense, try again, try again. I've been trying again for 8 years, right? 8 years, 9 years, I don't even know anymore because I just keep trying. I don't care about time. All I care about is not missing the next big thing, the next big move that's coming. Okay, so that means that March 2020 was the end of the B wave that started in 2000. Okay, and that's the key component here, right? It was a 20-year correction since 2000 to 2020. It was a 20-year correction. Can you see how the end of wave A put it to wave end of wave B in brackets, right? You can see how that snipped or just touched the top of the 2007 top there, ran straight through here, and that right there is a whole correction, a full correction, right? But the thing is that when corrective waves do this type of thing, it's very easy to think that that's a 5 wave move, and that's the problem. Just like what we saw back there in the B wave, right? You would have thought that potentially that was a 5 wave move, just like this one could be easily mistaken for a 5 wave move, like I've done it before, and I keep trying. And that's the thing, it doesn't work. It doesn't seem right. There's something wrong. Okay, so my latest count for the A wave of this move, okay, is that we have a zigzag 1, a 2, a 3, a 4, and a 5. Okay, it's a contracting leading pattern, right? You might want to call it a leading diagonal, except it's a very strange type of leading pattern, right? The wave 1 is the biggest, wave 2, wave 3 is not the shortest, wave 4, and then wave 5 is small and tiny. I mean, you take a look at wave 5 there, it doesn't look like a 5 wave move at all. In fact, these are moving up in threes. So that's A. Then you have an a B, a C, a D, and an E, right? These patterns only occur in certain places, right? And if you look at other charts like the S&P or whatever, this pattern actually goes lower. So this cannot be a wave 1, it's a zigzag, right? So that there gives away the clue that that's an A, B, C, D, E pattern. And then the rest of the move is a C wave, right up until we hit February 2020, right? So this one has always been mistaken as a zigzag, and that's why my analysis has been flawed. Take a closer look at that wave component right there, and it's not actually a wave component. It's actually a series of corrective patterns followed by a final move up, right? So let's just say, for example, here you have, from October 18, 2018, you have a zigzag A, you have a B, a C, a D, an E, and then that's it. You have a 5 wave move to finish it off, right? That there confirms that this is not a zigzag. It doesn't even look like a zigzag. Zigzags don't perform these kinds of moves. And that's why I believe Ariaswave is important when determining these factors. So what's the point here? Okay, the point is this. If this was the end of B wave, right, in terms of this being an E wave to complete the move, right? Let me just bring this one here and make it bigger, right? So that was the D wave. That was the E wave. That means that we've got to see the start of a new trend for C wave, one that's as long as the 90s, right? That's the whole point. Is that wave one, right, followed by an A, a B, a C, and then we had a D. This count makes more sense than anything I've ever posted before, right? And we had a D and an E. That weird move up there, it looks like it was an E. And then we had this move up that moved up as a leading pattern again. Wouldn't surprise me. Guess who was in office? Biden, right? So even though we're in the start of an uptrend, you have this weak wave one of wave three. Makes it look like this thing is not going to go any higher, except I don't believe that's true, right? I believe that, okay, for starters, even if, okay, so that's wave one, that's wave two. Wave three can't be, right, a type one weak five wave move. Wave one is a zigzag, wave two. Wave three is a zigzag, wave four, and then wave five was a zigzag. Can you see it right there? It's hard to mistake that for not being a zigzag. So that means that is the end of wave two. Price action cannot go below that red line. So which means that reversal is in play, and you would have had a short stop if you would have got in here. In fact, it's not too late compared to where this is going. So where is it going? Okay, I know that you're probably thinking, where is it going? And you know what? If you measure the move, well, I need to go to the weekly chart for this. If you measure the move since the 1987 crash, right, to the end of wave A, right, that move there measured from the end of wave E for March 2020, that takes us up to 133,000 on the Dow. And this is a wave D zigzag, right? Now, one thing that I tend to notice from time to time is this weird thing happens where the wave D within the B wave of the wave D is expanded. So this whole D wave is expanded, but so is the D wave within the D wave. Sorry, yeah, the D wave within the B wave of the D wave is expanded, okay, as a type 2, right, expanded zigzag. So that means that this is just the beginning of a large trend that's about to explode to the upside. It's going to be huge. But what do you hear in the news? What do you hear all these bankers telling you? That there's a hurricane ahead, right? It's going to be a storm and then a hurricane. Hell is coming. Why are they doing that? Why are they using all the fear of the past 2 years to get people fearful, right? And now the interest rates are going up, right? That people think, oh no, this is the end. Well, it might be the end of getting money for cheap, but don't forget that in 1941 up to 1981, interest rates went sky high. And what did the market do during that time? Well, it went up. Why? Because different priorities in the markets, right? Money velocity, money supply. Inflation is real and we're going to see it. So, yes, I am bearish after this pattern is completed. And that was my whole point the whole time, is that once this pattern is completed, yes, we're going to see a big crash. But from this latest analysis, it appears quite clearly that that D wave has not finished yet, right? It hasn't finished. So how am I supposed to be bearish now after discovering this? I can't. I can't be bearish, right? Because we have not seen any wave that resembles this move up to 2000, right? I'm going to make this big so you can see it. Big colorful yellow for you. There's nothing that has been that long. that's occurred in the markets. Even if you want to like copy this wave and put it up here, oh yeah, sure, maybe we have a little bit more to go. Except that's not a full correction. The correction ended here, right? That's why I believe that what we saw in 2017 in cryptos was just because of the C wave of the D wave being so large and, strong and expanded. I mean, look at the RSI. That thing was huge. It topped out hugely, like nothing has ever done that. Fair enough. But the point is that this move that started in March 2020, it looks like it's actually going to be impulsive to the upside. Right? Now, I want you to understand that this is my new view. There's too much evidence to suggest that this is um, the correct count. Okay, there's way too much evidence to suggest that. So therefore, my ideas moving basically from now on are going to include the thinking that we are going to see a massive bull run. Okay, now to put that into perspective, think about this for a second, right? You had this 2017 move up where cryptos went crazy, and then we had this move down. Does that change how I see XLM, for example? It does. Okay, and I'll show you what it means. Okay, I'm not sure if this is the right chart. Hang on, let me go to the STR. All right, look. I haven't labeled it yet, but I'm going to come out with this shortly. I'm going to produce a bunch of videos that relate to this kind of idea, this kind of view. This is important for cryptos. Okay, this move here, never thought it could be, but it might just be a 5-wave move like E wave to complete, right, this long-term correction according to, the Dow Jones, because the Dow Jones is closely correlated to Bitcoin and altcoins. This here, especially because it ended right at March 2020, you shouldn't even worry about what happened before March 2020. You shouldn't even worry about it, right? It's actually irrelevant. Sorry, let me just put that in. Don't know what I've done there. Okay, my line's a bit off. One sec. Right. So you shouldn't even worry about what happened before March 2020, because now is the start of that large bull run. Something that I had got mistaken time and time again, scratching my head constantly about this stuff, right? Wondering, assessing, digging. Nothing that happened before March 2020 is irrelevant anymore. Sure, it might be on for some strange reason, like ETH. That one's a bit weird. Bitcoin was a bit of a anomaly as well. So now my future updates are going to have to talk about how it relates to those cryptos, but how it relates to the rest of them, right? So I have been working on this new count, and I'll be bringing it to you shortly. Please stay tuned. You will not be disappointed, because this actually means that bull run is actually about to begin. And if you're curious about what this is a 1-2 pattern. Now that's interesting. So hopefully you enjoyed this video. I'll catch you in the next one.